Alphabet stock has been in rally mode in recent months after a court case worked in its favor and investor concerns have eased. Investors are now asking me, what do I think about Alphabet stock in 2026? I'll answer that question here. I'll give you my price target for Alphabet stock by the end of next year, using some estimates, assumptions, and scenario analysis to make this stock price prediction. All right, so to make this estimate, I need some data and estimates and numbers to utilize to make this prediction. And that's a great point and a great time to thank the sponsor of this video, Fiscal.ai, where I can get aggregated financial information that saves me a lot of time from having to go to all these different websites to collect this information. One of the numbers I'm going to need is Alphabet's earnings per share estimates from Wall Street Analyst. So Fiscal.ai has this information. Here we have for the fiscal year that ends in December 2027, the Wall Street Analyst expect Alphabet to deliver $12.10 in earnings per share. I'm going to need this number alongside the company's forward PE ratio to conduct some scenario analysis for Alphabet stock. All right, so we already got the earnings per share estimate, and here I have a chart of Alphabet's forward PE ratio. You can see the stock has been in rally mode after trading at a forward PE of around 15, which I made several videos highlighting what a bargain Alphabet stock was at those lower valuations. I ranked Alphabet stock as one of the best stocks to buy this year, so hopefully you saw that research and came to a similar conclusion. As Alphabet stock has rallied now, it's trading at a forward PE ratio of 25. It's about in the middle of where this stock has traded for, according to this valuation metric going all the way back to 2016. So if you're interested in this kind of data, Fiscal.ai has this and much, much more. You can see the link in my description. You'll get a discount if you use my affiliate link to join Fiscal.ai, and you'll get a free trial. So now that we have the data we're going to utilize, I can share with you the scenario analysis here. And in these scenarios, I'm keeping the earnings per share constant. This is the 2027 earnings per share estimate we got from Fiscal AI. I'm keeping it constant at $12.10. What I'm going to change is the forward PE ratio. Right now, Alphabet is trading at a forward PE of 24.8, but there are likelihood that the company's forward PE ratio increases or decreases between now and the end of 2026. If the forward PE ratio increases to 28 and the earnings per share remains the same, the stock price could rise to $339 a share. If the forward PE ratio increases to 32, the stock price could rise to $387 per share. But it's not all upside. There is chances that Alphabet's stock price declines next year. And if the forward PE ratio declines to 16, the stock price could rise to $194 per share. You might be thinking, well, what scenario would cause Alphabet stock price to fall by that much? I'll give you one example. If there are reports and data that shows Alphabet's search engine business is not growing or growing at a much slower pace, that could cause investors to flee Alphabet stock. That's one of the biggest concerns from Alphabet stock investors and those that are bearish on Alphabet stock. The reason is that they expect its search engine business to experience significant headwinds because of changing consumer behavior. People are spending more time on large language models, and Alphabet has its own in Gemini, but also ChatGPT and others, and investors fear that Alphabet will not be able to monetize those queries as well as it's monetizing the current Google search engine business that it's experiencing. So if that trend worsens significantly, then that's the big downside here for Alphabet. Now, there is a non-zero probability of that, and that is the biggest concern for myself as well. I own Alphabet stock, and that's my biggest concern, is how the business will be impacted by this changing consumer behavior. Now, my initial expectation is that the overall size of the pie will increase because of large language models and because of AI. People are searching more. People are engaging more, and that's creating an increase of the overall size of the pie, even though I fully expect Alphabet to lose market share to ChatGPT and others in this category. But I don't see that as necessarily a bad thing. Remember, I talked about the court case earlier that worked in Alphabet's favor? Well, Alphabet has such a dominant market share in search engine business. At one point, its market share in that category was over 90% worldwide. And when you have that kind of market share in an industry, it attracts regulators, it attracts governments trying to pick on you and claim that you're a monopoly and force you to do things that you don't want to do, like selling pieces of your business, chopping it up and selling pieces. And so that might not be a desirable situation. Certainly, it takes away from management's focus where they have to pay attention to those kinds of things instead of paying attention to working on their competitive advantages against their competition and gaining market share. They're working on dealing with regulators, dealing with courts and governments, etc. That's not really what you would like your management team to work on. You'd prefer your management team to work on products and work with customers. And so if Alphabet loses some market share in the search engine business, I don't see that as such a bad thing, especially if the overall size of the pie is increasing, but Alphabet's share of that pie is decreasing. I see that as actually an ideal scenario, so long as the losses can be contained and don't stretch into huge losses and the industry doesn't become extremely volatile with competition fighting against each other, trying to take market share. So there is still a big risk there, but there are outcomes that will be ideal for Alphabet and others in the industry. Remains to be seen how it all plays out, but that is the biggest risk. And if those risks worsen, then Alphabet's valuation will likely worsen. All that being said, where do I think the most likely price for Alphabet for 2026? So, as you already know, I don't provide a pinpoint estimate because that would be showing that this is a precise calculation, which it's not. I shared with you, I'm using several estimates and assumptions to make this prediction. So I'm not going to predict to a precise point, but rather a range. And that range I expect will be somewhere between $280 per share and $310 per share for Alphabet stock next year. By the way, if you want access to those stock price predictions that I've been making and my buy, hold, or sell ratings on over 200 companies, you can get access to all that with the channel membership to my channel at the investor tier or above. You get the buy, hold, or sell ratings, you get the price predictions, and you get my intrinsic value calculations, my DCF valuations for over 200, closer to 300 companies. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.